pack. R. Sreesankar from Prabhudas Lilladher now joins us. What do you make of the rate cut coming in from RBI and the reaction that the markets have shown?
The market has taken it obviously very, very positively, and what also it shows is that the confidence level of the market and the businesses are extremely high, and that has sent the market soaring up. And you look at even the 10-year bond yields, it has gone down to a new low of around 760 something. So that's seen in the market. And can the market maintain this momentum, or will this remain as a one-day rally? That's something which we need to wait and see.
Do you think that this is a sort of pricing in scenario where the rates cut would tend to continue? They have done a 25 basis point rate cuts. Do you think the markets have already started factoring in more rate cuts coming in? Because, with 25 basis points, nothing much would change, at least in the near term.
See, let's look into some of the data points that we have in the system. Obviously, when I look at even the BSE 30 companies or Nifty companies, apart from the financials, the interest cost as a percentage for the BSE Sensex companies is 1.8% of its revenue on a consolidated level. So now even a 25 basis point rate cut, what is it going to make to these Sensex companies? Nothing, according to me. Again, if we look at even BSE 100 companies, it's probably still sub 2. If you look at BSE 200 companies, it's probably around at 2% or so. So a 25 basis point rate cut, I don't think it is going to make a material change in terms of interest rates to a great extent, because it sets the direction, or it sets a direction is set, plus the confidence level on of the people which will continue to be there. That's what has changed right now. I don't think materially a lot has changed, except if you look in detail at the circular. It also says that the inflation expectations of RBI has come down, and also the global commodity prices fall, which has also had a huge impact on this rate decision. And I think these are all the things which we need to take it positively. What I would ideally look at going forward, how the entire domestic economic scenario will turn out to be. And we have not seen much of a growth happening in the domestic economic scenario. Will that start to really kick in? Because the ordinance on metals and mines, etc., that should be positive. We view it as a catalyst for the entire sector. That should actually result in a lot more kind of a confidence level within the system and growth happening from that system, etc. So that's something which people will be keenly looking at.
Right, but the move has started to come into the infra space, real estate space. Do you think that they can revive with the rate cycle shift?
Definitely. Now, I did mention about this 1.8% or 2%, etc. That's excluding financials and excluding probably all the financials, right? If you look at the real estate companies and infrastructure companies, the interest as a percentage of that revenue is pretty high. Those companies obviously will benefit. And if you again look through the entire the sectors where the big delta that you have seen today in terms of stock performance, reality is one, infra will be there, banks will be there, and all these banks will be there. So obvious beneficiaries of this fall in rates, etc. So now that's what it sums up.
Right. If you look at the banking names, it's essentially, we just, they're also reacting to their results coming in. We just spoke to Yes Bank a while back about their results. They said that the overall credit demand is not that great from corporates. When do you think that would start to pick up?
That's again why I mentioned about, you need to see the domestic economic growth happen out there. So that economic growth happens. See, there are capacities which is still there, which is not getting utilized. What we need to see is that those capacities get utilized, and that will only start infusing confidence for people to put in new capacities. That's where the rate cuts will come in handy, because your new projects are going to come in, which will be at a probably interest rates, borrowings will be at a much more lower levels. Rate cuts are good, but how much it is going to start impacting in your economy positively? For that, the domestic growth needs to be strong. What we think is the measures that the government has taken has actually and will lead to the growth in that sector. So probably it may give we may see some of a lead time. We were expecting that to happen by the third quarter. It has not happened. Probably in the fourth quarter. It may not happen in the fourth quarter also. It may move to the first quarter of FY16. That's when you may start to see the ground on the ground the benefits of this domestic growth being felt through. That will be the game changer.
Right. If domestic growth is sometime away, any view that you have on the cement space? All of them have been, just flying, whether it's Ultratech, whether it's Grasim, whether it's, any other large cap names. Any thought on the cement space, that why it is doing quite well?
See, we have Ultratech as one of our top picks, and we also like JK Lakshmi Cement in the mid-cap space. Again, it's also a story of the domestic consumption growth. Once the domestic consumption, domestic economic growth starts to improve, you should also start to see a capacity utilization of a lot of these cement companies improve, especially in the south, where the capacity utilization has been low, mainly in Andhra, which will feed through to the capacity utilizations in Tamil Nadu as well as in Karnataka. That should start to improve. Once that starts to improve, probably the profitability of these companies also will be on the higher side. So expectations for the growth will lead to improved profitability, and that's driving these valuations. Again, Ultratech is not cheap. It's still at what, $165 EV per ton. So when we can put in capacities at around $120, and $165 is not cheap. But the kind of confidence level in terms of an earnings growth that it can have, and that's a large company, by far the largest in the entire space. So it will get a premium, and that's where it is investors getting more confident on.
Right. Thank you so much for joining us, Sreesankar, here this afternoon. Always a pleasure talking to you. Of course, since today.
Presented by